Hello and welcome. Today we shall be taking a look at global consumer health, hygiene and home company Reckitt Benckiser PLC. The company has a market capital of £41.2 billion and is currently ranked 13th on the UK FTSE 100 index. In the financial year to December 2017, Reckitt Benckiser had a turnover of £11.51 billion and an operating profit before tax of £2.5 billion, which gave it a margin of 21.7%. It currently pays an annual dividend yield of 2.95%, which is paid semi-annually in May and September. This dividend is covered 1.91 times by the earnings per share. The Benckiser company was founded in Germany in 1823. Reckitt & Sons started in England in 1840 and listed on the London Stock Exchange in 1888. In December 1999, Reckitt Benckiser formed by the merger of the UK-based Reckitt & Coleman PLC and the Netherlands-based Benckiser NV. In 2014, Reckitt Benckiser announced it was dropping its full name in favour of RB. The current CEO, Rakesh Kapoor, joined RB in 1987 and was appointed CEO in 2011. RB employs over 40,000 people worldwide from its headquarters in Slough, England, with operations in around 60 countries and products selling in nearly 200 countries. In 2017, the total net revenue was divided between two business units, Home with Hygiene and Health with Infant and Child Nutrition, IFCN. Home and Hygiene was 55% of net revenue. Products include Vanish, Calgon, Dettol, Harpic, Finish and Silic Bang. Its top 7 home and hygiene brands accounted for 80% of net revenue in 2017. Health and IFCN was 45% of net revenue. Products include Durex, Scroll, Nurofen, Enfamil and Nutramigen. IFCN, the acquired Mead Johnson business, was £1.55 billion from June 2017 to year-end. The group's geographical segments are ENA, this includes Europe and North America, was £6.69 billion, which represents 58% of net revenue. DVM, which includes North Africa and the Middle East, was £3.26 billion and represented 28%, and IFCN was £1.55 billion, which represents 14%. For the previous 4 years, RB has had a consistent revenue of between £8.83 and £11.51 million and an operating profit margin ranging from 21.7% to 24.9%, which gave it an average of 23.6%. The forecast for 2018 is a 9.2% increase in revenue to around £12.57 million and a profit margin of 23%. With generated earnings for the previous 4 years of between 233.6 and 320.8 per share, the dividend has always been covered by at least 1.68 times the earnings per share. The forecast for next year is only a small increase in the earnings per share. The share price standard deviation for 2018 was 470 compared to 260 for the FTSE 100. The current share price is 14.9% above the 52-week intraday low. In March, RB announced that it had ended discussions regarding its potential £15 billion takeover of Pfizer's consumer healthcare business. This news was well received by the market. Investors had become concerned about the debt that would have been necessary to buy it just a year after RB took over the US infant food giant Mead Johnson. The half-year report in July reported that full-year net revenue targets had been increased. With the contribution of last year's acquisition of infant formula business Mead Johnson, total sales rose 23% to £6.13 billion. Operating profit rose 29% to £1.28 billion and operating margin of 23.6%. This news was well received by the market. There was a fall in the share price at the end of October when it reported that Q3 was another quarter of progress, but the quarter had been impacted by a temporary manufacturing disruption at the European IFCN plant. Business unit Health and IFCN was 62% of revenue and Hygiene and Home 38%. In January 2019, Rakesh Kapoor indicated his intention to retire as CEO at the end of 2019. Chairman Chris Sinclair said that under Rakesh's leadership, RB had been transformed from a household cleaning business to a world leader in consumer health and hygiene. His tenure had not been without incident. In 2016, RB admitting selling a humidifier disinfectant that was linked to the deaths of people in South Korea. In June 2017, the Mead Johnson acquisition sent down profit margins. It also announced that there had been a cyber security breach and the failure of its Scholl wet and dry foot file innovation. The baby milk production in the Netherlands, affected by so-called technical engineering problems, took £70 million out of the 2018 Q3 sales. Following this, there was the failed £15 billion takeover of Pfizer's consumer healthcare business. Some investors began to question the value of the £12.7 million paid in 2017 to the CEO. Full year results are due the 18th of February. RB has been transformed from a household cleaning business to a world leader in consumer health and hygiene, with world-leading household names. The infant and child nutrition segment is a growth area, with China being the world's largest IFCN market. With a high return on capital expenditure, RB continues to deliver solid earnings and dividend growth and high levels of free cash flow, with its stable long-term sales of its core products. It needs to continue to do this over many years, with the net debt at the end of 2017 at £10.7 billion. The share price has fallen recently, but the price-earnings ratio is still considered high at 17.8 compared to the FTSE 100 average of 11.5. RB pays a dividend yield of 2.95% compared to the FTSE 100 average of 4.57% and is currently covered 1.9 times by earnings. For these reasons, I've given RB an overall rating of 4.3 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.